Hey there, everybody. This is Gregg Gossett from Gossett Trading and Mentoring, and today is Saturday, March 4th, 2023. Hope you're doing well, and thank you so much for coming and visiting me for another edition of the Gossett Trading and Mentoring Weekend Review. In this podcast today, here is the format. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the positions that I had last week, entries, exits, when I bought the position, why I bought the position, and most importantly, how I am going to manage the position going forward. I have trades both on the daily time frame and also the weekly time frame that I will go over. It was a great week last week. We had a really strong rally the last couple days of week, Thursday and Friday. And yeah, it's been a really great week. I hope you're all doing well. I hope your trading is going well. And so we'll go through, we'll take a look at all the different positions, see how they're doing and how I'm managing them. After that, we are going to talk about trader psychology. Always the most important skill in trading is the ability to create a plan and then follow that plan. As far as position sizing correctly, emergency stops, end of day stops, taking partial profits on the way up. At least that's the way that I do it, looking for significant overhead resistance levels. And so that's what we're going to do. We're going to check that out, take a look at that. But the psychology section is the most important because, you know, when the weekend's here or the market's closed, it's easy to say, okay, I'm going to buy here, I'm going to do this, I'm going to scale out here. But then when the lights are flashing and blinking during the day, you know, I think it evokes us to use a different part of our brain. And, you know, the skill in trading, the psychological skill is to be able to sit there on your hands and not do anything until you're supposed to do something. That is a skill. So trader psychology is very, very important. Putting together a plan, not that difficult, right? We look for support, we position size, but sticking with the trade is a difficult thing. We we always talk about taking stops, and yes, of course, very, very important, but there is also a skill in sitting with the trade, and you have to have some large wins occasionally to pay for the inevitable loss, the small losses, hopefully, that you're going to take. So trading psychology, very important. Going to cover that. Have a great post from my friend and mentor Steve Burns that I'm going to cover. After that, I'm going to do a quick poem from my friend Frank, who is the trading poet, always writes great poems pertinent to what's going on in the market. So we'll do that. And then after that, I have gone down through my watch list, both on the daily time frame and the weekly time frame. And I have identified some potential trades for next week that I will be looking for my trading account. Now, usually the stock, regardless of time frame or market, doesn't have to be a stock, has to go either higher or lower for me to get interested in. I mean, if it was perfect on Friday, I probably would have taken the trade. And I did have some new trades on Friday, and I'll show you why I entered them and the thought process that goes along with them. But as far as next week, what I like to do is I like to identify levels, both on the daily and the weekly, that make sense to me on both time frames. What I mean by that is if I'm trading a daily time frame, yes, I want to look for that level. But then I also want to take a peek at the higher time frame, which would be if I'm trading on the daily, if I'm doing this on the daily, look to the weekly to see if there's some supporting levels there as well. And if I'm looking to trade on the weekly, I want to look at the monthly to make sure there's some supporting levels on the monthly. So I always like to look at two time frames. I think it's very important. You know, there's monthly traders, weekly traders, daily traders, and you want to see what the bigger time frame is doing as well. All right, so the market moved up significantly Thursday, Friday, but I still do have some potentials that I'm looking for next week, both on the daily and the weekly, and I will share those with you. Been a great trading week. It's been a great trading year so far. So very thankful for that. I hope the same is for you, and I hope that this podcast does kind of help you, give you an idea how I view trading. And, just so you know, just so you're aware, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've taught for many years. I've taught people from all over the world. And I trade 5 different strategies and in my one-on-one course, I teach you specifically step by step how to identify and manage these trades. It's a great course. I think you'd be very happy that you took it. So if you do really want to learn the skill of trading, I'm a great teacher, and you're going to learn a lot. And it does cost $1,750, but it's worth every penny. I promise you that. And I'll discuss that a little bit more as we go along. So that's the format for today. First of all, I'm going to run the U.S. legal disclaimer, and I'll be back in about 40 seconds. So hang tight, please. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Well, thank you for sticking through that with me, and let's get started. First on deck, Qs. This has been a great trade. I did buy the Qs back here on the 24th of February. Why did I buy it? Well, whenever I look to buy something, as I said earlier, I need it to go down, find some support, or I need it to move up, look for some upward momentum. But I bought Qs back here on the 24th of February because we came and we just very simply bounced at the 200-day moving average. The 200-day moving average is a significant level that large financial institutions and savvy traders look for. And it's a bit of a self-fulfilling prophecy. If I have to be honest, I was talking about buying Qs if and when it came to the 200. A lot of other people have the same kind of thinking. And so there really, as it started to approach the 200, there was not a lot probably people were holding their bids. They weren't buying until it got to the 200. And so in a strange way, it's a bit of a self-fulfilling prophecy to bring it down. It's like, oh, I'm not touching this thing until it gets to the 200. Well, then it got to the 200 and I bought and a lot of other people bought and I started to set up my trade. Just the bounce at the 200 was my trade. I did get a little earlier price here. I bought it at 290.77. I placed my emergency stops 2 ATRs below. I have some new trades that I took on Friday, and I'll explain the exact process of how I do that when we get to those particular trades. But essentially, I position size based upon the volatility. I place my emergency stop 2 ATRs below my entry, but this is my worst case scenario stop. My end of day stop is simply a close below the 200-day moving average. I mean, when you get into a trade, you have to factor in what is the worst case scenario. And the worst case scenario, unlikely, as a matter of fact, using a 2 ATR stop, you're only going to hit that stop generally about 5% of the time. The other 95% of the time, if you have a loss, it will be simply a smaller loss closing under the 200-day moving average. Now, when I take a position in something, if it moves up the value of 0.45 ATRs from the previous day's close, I always take a portion off. Your emergency stops, your end of day stops, your trailing stops, these are all defensive moves, but you also need offensive moves. Just like any great sports team, you need a good offense and defense. Well, offense in regards to trading for me is taking partial profits when the market gives them to me. So I bought here at 290.77. It moved up the next day and I took some profits off. Then it came back down, still holding the 200, bounced again at the 200. Then we had that really bad opening underneath the 200. Does that mean I get out? No, I don't, because I make my buying and selling decisions, except for my emergency stop. regardless of what time it is, I will take the emergency stop if and when it gets there. But as far as my end of day stops, I wait till the end of the day because I believe the end of the day price is the most valid price. The large financial institutions, they come in that last hour, in particular in the last 10, 15 minutes, and they are dealing with the most money. They have very smart people, best technology, and I consider the closing price to be the most valid price of the day, and therefore that's why I make my buying and selling decisions based upon the close. Well, on Thursday, we opened up lower, but I held into the trade because I want to see what the end of day price is. Well, the end of day price held above the 200, keeping me in the trade, right? Also took some profits here. And then Friday, of course, was a big day. Hit two profit targets, or actually 20% on the way up. So the trade is doing very well. Currently, right now, the trade is up on the remaining shares from entry to exit 2.93. You see, I also have this orange line up here. This orange line is 1.5 ATRs, or 1.5 average true ranges, above my entry price. As soon as I get there, then I go into trailing stop mode, which means in the future now, if I have a close below a previous bar's low, I will go ahead and take half. 1.5 ATRs means it's outside of noise. That's why I pick 1.5 ATRs here. Hopefully it just keeps going, but I love when I get to trailing stop level because it almost guarantees, not 100%, but it almost guarantees that I will have a profitable trade. So far, so good on the Qs. On the way up here, if it continues to move up, I will continue to take profits. I will be looking at the 65 RSI level. Then I have another rule that goes into place. If I get there, then I use the 5 EMA as a trailing stop for the entire position. If we get and reject the 70 RSI, I will take half of whatever I have remaining. And then if I have a close below a previous bar's low after reaching the 70 or rejecting the 70 RSI level, then I'll be out of the entire position. So, I've been trading for 28 years, and the majority of the research that I've put into my trading and my trading process has to do with managing the trade as it is occurring, with trailing stops, with taking partial profits, the 65 RSI level, the 70 RSI level that I discussed. These are all part of my process and rules that I've developed over 28 years. And again, this is what I teach step by step in my one-on-one courses. And it would be great to have you as a student. And so just please reach out to me if you're interested. My email is in the link of this description. Because in this podcast, I discuss, what my rules are, and you might think, well, that doesn't make any sense. Why is he doing that? Again, this is what I completely teach. You'll understand it fully if you take my one-on-one course. So far, this particular trade up 2.93%. We did make it over a little bit of a pivot point here, which I like. It shows possible structure change. There are some gaps here. Don't take this to the bank, obviously, because I don't know, but I would imagine we possibly have another day or two to the upside, but then I think we're going to have some movement downside because we're coming into these gaps here, but we shall see. Okay, next position is gold. Gold is a deep dip buy entry that I took. If you've been following this podcast for a while, for several weeks, I was talking about gold, looking to get into gold if and only if we rejected the 300-week moving average. This is called the deep dip buy stock trading strategy, and this one has worked out fantastic. So I bought this here the 27th of February, bought it here at 168.90 with an intraday rejection of the 300-day moving average. Of course, you see my emergency stop down here. As always, have an emergency stop. My end of day stop would simply have been a close below the 300-day moving average. I bought a support. The assumption was that there would be some kind of support at the 300, but I didn't just buy it when it got there. I wanted to see it rejected, which it did, right? Got in at 168.90, moved up strongly the next day. Also took some partial profits, as I always do. Next day up again, took two profit targets. On Friday, took another two profit targets. Got here to 1.5 ATR trailing stop level, which I love because now I'm in trailing stop mode. This particular trade from entry to exit up 2.08%. But the key takeaway here that I'd really like you to understand is waiting, identifying the level days or weeks in advance and just sitting on your hands. And if it gets there, then take the trade if it does what you want to do. I mean, if I would have tried to be early on this here, it would have just been a nightmare, right? But I just sat there steady, like Tom Brady in the pocket, and waited weeks for it to come down to the level that I wanted. In addition, we also rejected the negative third ATR channel, which is also a confirming signal. Not going to take the trade just based upon the rejection of the third ATR channel, but in conjunction with the with the intraday rejection of the 300, it made a lot of sense. And you can see this trade has turned out very, very well so far, up 2.08% in a couple days. XLV, another deep dip buy approach that I have been talking about for weeks, waiting for the stock to come down to the 30 RSI level and reject. And it did. And it also rejected the negative third ATR channel. I bought here 126.88. Next day moved up, took partial profits. Of course, we had another big move up on Friday, took some more partial profits, did get to trailing stop level already just in 2 days. So now I'm in trailing stop level for XLV. Of course, I have my 2 ATR emergency stop down here. And my end of day stop on the under 30 over is just simply it closed back under 30. Didn't happen. Good for us. Good for me anyway. And very grateful for that. This particular trade from entry up 1.73%. Okay, Apple. Well, sometimes our rules cost us, but more times than not, they're going to save us. I did buy Apple back here on the 27th with the close under, close back over the 200-day moving average. I bought it at 147.80, placed my emergency stop, two ATRs below, and my end of day stop is simply a close under the 200. Well, bought here 147.80, next day moved sideways, and Wednesday it lost it, closed below the 200. I had to get out for a loss of 1.74%. Next day came up, rejected the 200 again, and then Friday, boom. Yes, if I would have held this, I would have been nicely in the money, but there's pros and cons to following rules. And following your rules sometimes will cost you money, but in the long run, it will save and make you money. And you just have to understand that some of them are going to get away. Apple was up huge, 3.51%, but I lost 1.74% on the trade. All right, let's head over to the weekly trades. And here we go. QLD. QLD is double leveraged Qs. So it moves twice as much as the Qs. Well, I like to intersperse some shorts along with all my longs to give a little bit of a hedge if I have a valid signal. And I did short QLD on the 3rd of February when it rejected the 200-day moving average. I got short 46.10. Now, when I'm short and it moves down, I'll take partial profits. Orange line here is my 1.5 ATR trailing stop level. Have not reached this yet, but as it moved down, I took my partial profits on the weekly. So the next week moved down substantially, took some profits off. Next week didn't do much. Next week moved down, took some more partial profits that the market cannot take away from me, and it reduces my position size. So if it does go running on up, the loss is mitigated. This particular trade with the shares that I have remaining in the profitable 6.22% so far on the trade, and grateful for that. SSO. SSO is a long position in SSO, which is double leverage SPY. Here was the trade under the 200, over the 200, placed my emergency stop, my end of week stop, simply a close below the 200-day moving average. If it moves up, I'm going to take partial profits. The next week, it moved up significantly. took profits off the table. Next week, nothing. Next week, moved up nicely again, took profits off the table to the upside. Moved up again, took more profits, also got to my trailing stop level, which means now I go into trailing stop mode. If I have a close below a previous bar's low, I get out of half. 2 weeks later, did close below the previous bar's low, took partial profits of 3.72%. And then this week, nice big move up again. So the shares that I have remaining here on this particular trade up 6.83%. What else do we have? IWM. Oh my gosh, I've been in this trade for decades, it seems like. But it's been a good trade, and it's a good teaching moment too. The 300-week moving average is where I bought the trade, entered the trade long with the rejection of the 300-week. I placed my emergency stop 2 ATRs below, giving me a good level to construct this trade of. And if I was wrong, hopefully I'm wrong small. I got in 167.19. Started to take partial profits on the way up, as always. Got to trailing stop level here. And then I go into trailing stop mode, looking for a first close below previous bar's low. That happened here. Took partial profits of 6.4% on half the position. Started to come back down. I was like, oh, I may have to get out of the trade. But no, moved up again. Took massive profits on that bar. And for the remaining shares that I have at the moment on IWM, up a whopping 12.78% on this weekly trade. All right, let's get to CarMax. Boy, I have a lot of positions. But they're not full positions, right? Because I scale out. CarMax, I took this back on the 20th of January with this higher low V1. This is not a deep dip buy. This is a different strategy that I take. I have a student that I'm teaching at the moment. He's a hedge fund manager. And, we were talking about, like, do I have one strategy that is my favorite? And yeah, my one strategy that really is my favorite are higher low V1s or V2s in the value zone. As a matter of fact, we have a double bottom bullish divergence here. And probably, if I have to be exact, my very favorite trade is looking for a double bottom bullish divergence. Here's the low, deep red MACD bars, rally into green, come back, test the low, no red bars here. This is double bottom bullish divergence, missing right shoulder. Excuse me. After that happens, a rally into the value zone, and then a V1, V2, or a V2 entry with a really tight stop, and it worked out perfectly. Double bottom bullish divergence and higher low V1, entered here at 65.40, placed my emergency stop 2 ATRs below. My end of day stop, or excuse me, end of week stop on this trade is simply it closed below halfway the washout bar. See how close my stop was at 65? I got in at 65.40. So 40-cent stop. But this particular setup worked very, very nicely. Got in 65.40, moved up, took profits on the weekly. Next bar moved up significantly, took more profits off, which is key. Got to trailing stop level. And then a few weeks ago we had a close below previous bar's low. I took half of what I have remaining for a profit of about 10.28%. Now, we moved up this week another 3.64%. My rules on a higher low V1, V2 is if you have a higher low V1, V2 in the value zone and you get to trailing stop level, and then if you ever get back to your entry point, then I'm going to take the entire position off. I don't want to let a very nice, beautiful double-digit trade turn into a loss. So that is one of the rules. Again, I will teach you this all in my course, teach you all 5 of these. I know it sounds like a lot of rules, and there are, but when you're done, you will know them. And like I said, in 28 years of trading, I've spent most of my time in my research on how to manage the trade. Where to enter a trade, that's not so hard, right? 200, 30 RSI, but how to manage the trade going forward is the most important, and that is what I fully cover in the one-on-one course. And really, best way to learn anything is one-on-one with your teacher or your mentor, and that's why I offer the one-on-one course in the evening time, one-on-one, because it's the best way to learn. So up this week, this particular trade on the remaining shares up 7.19%. Really good trade. What else do we have? WBA. Okay, WBA. Uh, Beautiful return to value V2 entry. We're above the value zone. We pull into the value zone. We have some sideways motion, and we trigger a V2. You hear me talk a lot about V1s, V2s. One of my favorite setups. Really, really love them. They're a big part of my bread and butter. They show a rejection, a false breakout to the downside, and a reversal back up. So I did get long WBA, which is Walgreens, here at 36.90 on this V2. And by the way, if you want to learn more about V1s, V2s, of course, I teach them in my one-on-one course, but I have a video on YouTube in my lessons playlist, V1s, V2 entries. It's totally free. Go there, check it out. I think it will help you. It adds a V1 or V2 adds a lot of credibility to any type of trade, regardless if it's a higher low V1, V2, or a deep dip buy. But this is a very particular setup. Return to value, sideways motion, V2, got long here, 36.90. My stop on, I place my 2 ATR stop down here, emergency stop, and then I have a end of day or end of week stop here, halfway of the washout bar. This is an important level. The halfway is an important level. Look, the next week we went below that half level, kept above, kept me in the trade. Next week went below the half level, kept above. Next week didn't mess with it. Next week touched it but held. This week went below the halfway, but I wait till the end and closed above. You see how important that the halfway of the washout bar level is, and it is above, so it kept me in the trade. Now this trade down slightly, down 2.24%, but I'm encouraged by this additional V1. Here's bar 1, bar 2. Bar 2 goes under bar 1's low, close above bar 1's close. That is a V1 at a high level, but still staying in the trade, moving sideways. Sideways motion, everyone. Sideways motion, you should get to know and like sideways motion, because sideways motion is going to lead to a trend, either up or down. Don't know which way. Hopefully it's up, because I can let it run. If it's down, if it goes down, which it very likely could be, then I get out quickly for the loss. So this particular trade down 2.24% on the weekly. AMD, another long position on the weekly. I bought last week at 77.20. We had this big, huge, big bar up. We came back down on lower volume, which is important, bounced at the 200-week moving average. I got long at 77.20. Of course, I placed my emergency stop down here. My end of week stop is simply a close below the 200-day moving average. 1.5 ATR trailing stop here. Did not hit a profit target. It got very close to a profit target, but not hit a profit target. This particular trade now in the first week up 5.42%. Really nice. UNG, well. This has been a monster, everyone. Been a monster. These are weekly bars on UNG. Last week or 2 weeks ago, I had a trade on UNG. Not a good one, but redemption time on UNG. I did buy UNG last Friday at the close of the weekly bar at 8.49. Why did I buy it? Well, from a deep dip buy perspective, under 30, it went under 30, over 30 on the week. That is the core reason. That's the core entry signal. But it also had some confirming signals, which is a V1, bar 1, bar 2 goes under bar 1, reverses back up above the close. That adds to the trade, and we also close back above the negative third ATR channel. So got in here, 8.49 was my entry price. This particular trade up, let's see, 13.66% in the first week. Pretty great, right? Did take off 10% of the position while I had it. Market can't take that away from me, and if it does turn back down around, well, then I have fewer shares to help mitigate the loss. I have my 1.5 ATR trailing stop level here at about 12.50. If it gets there, I'll get into trailing stop mode. You know, when you're in a weekly trade, you can be in this for months, right? Because every bar is a week, and I hope to be in this for months. Because if I'm in this for months, it means keep going up and making money. If I have a losing trade, I'm usually out in a week or two, which is fine because I want my losing trades are going to be I'm going to be in them a lot less time than my winning trades, and that's the key. Being very patient with your winners, staying in them as long as they're doing what they're supposed to, getting out quickly if you're wrong, which you're going to be a lot of the time, but getting out quickly with that loss. So beautiful trade, beautiful setup, under 30, over 30 on the weekly, supported by a V1 entry, supported by a close under, close over the negative third ATR channel. In 1 week, up 13.66%. Pfizer took Pfizer, which has had this huge meltdown all the way from 54 down to 41. I did buy this on Friday, yesterday. And I posted this on Facebook, and I think I just kind of did it out of habit. This was not a bounce at the 200. I actually bought this. I don't know why I posted it that way. I bought this because it went under 30, over 30. It got close to bouncing at the 200, but it went under 30, over 30 on the week. It also rejected the negative third ATR channel. I got long here 4103. Let's take a look here. Okay. Place my emergency stop down here. My end of the day stop is just the opposite of why I got in the trade. Why did I get in the trade? Under 30, over 30. So simply next week, if it closes back under 30, I will get out of the trade. And let me show you how I position size for this. So position sizing is very important, everyone. The market at different times has different volatility. So if the volatility is higher, you want to buy fewer shares. If the volatility is lower, you want to buy more shares. And how do you do that? Well, this is what I do. It's one of the simplest things you can do that takes all this into consideration. What I do is, let's just say I have a hypothetical $100,000 trading account. I take 1% of that as my maximum loss. So 1% of $100,000 is $1,000. If you have a $500,000 trading account, 1% would be how much? 500, right? If you have a 5,000. If you have a $50,000 trading account, 1% would be 500. So it's just based upon the total capital. 1% maximum allowed loss is not going to destroy your account. So 1% of 100,000 is 1,000. I take 1,000. I divide it by the value of the 2 ATR on whatever time frame you're on, divided by 4.36. That would tell me to buy 229 shares. So I buy it based upon my entry signal. I place my emergency stop 2 ATRs below, or in other words, 4.36. Well, if it moves 4.36 and I have 229 shares, what is that? It's roughly the $1,000. So that will be my emergency stop. If it moves 8, 9, 10, 15% to get there, it doesn't mean you're losing that much, right? Because you're using this formula, your maximum loss is $1,000. So I hope that makes sense. Then I place my 1.5 ATR trailing stop level above here. So I take 1% of my total capital. I divide it by the value of the 2 ATR value on the particular time frame I'm using. That shows me how many shares to buy. I enter the trade. I then place my emergency stop exactly whatever the 2 ATR was that I divided into my total trading capital. And if it ever gets there, I get out. And then what do I lose? Lose $1,000. If it's a weekly, I wait for the weekly trade. If daily, I wait for the daily trade to make my end of bar decisions. But if it gets to my emergency stop level, regardless of the time frame, then I'm out because I've told myself 1% of my trading capital in the worst case scenario is all that I'm allowed to lose. And so regardless of the time of day or the time of week, if it gets there, I just hit the button, I'm done, and I get on to the next trade. All right, so that is Pfizer up slightly on the trade, on the weekly trade, up 0.29%. And then Amazon. Took another trade on Amazon on the weeklies. I was telling you before, higher low V1s are my favorite. Here, this green line, this is called the value zone. Moving anywhere in between here is the value zone. The rule here is first we have to close below the -1 ATR channel or the bottom green line. Then we have to rally into the value zone. Then we have to pull back and have a V1 or a V2. Well, it's exactly what happened on Friday. We closed below the value zone, came in, pulled back. Here's your V1. Bar 1, bar 2. Bar 2 goes under bar 1's low, closes above bar 1's close. Same trade as I showed you on CarMax, by the way. I position size by taking 1% of my total capital, dividing by the value of the 2 ATR. That tells me how many shares to buy. Then I place my emergency stop exactly the value of the 2 ATR below my entry. This red line is my emergency stop. If it gets there, I get out. How much do I lose in that hypothetical $100,000 trading account? $1,000. But 95% of the time, you are not going to hit this. You're going to hit your end of day stop. My end of day stop, just simply a close below halfway of the washout bar, or the washout bar on this V1, bar 1, bar 2, right? It goes under bar 1's low, closes above bar 1's close. Position size, 2 ATR stop, end of day stop, half a close below halfway of this washout bar. If it closes below by 1 penny, boom, I'm out for a small loss. If it moves up, now I'm going to start taking partial profits on the way up, and this is a good example here. So let me show you how I do that. Here's the closing price, $94.90, $94.90. I add the value of the 0.45 ATR to it, which is 426. So I add 426 to 94.90 plus 4.26. My first profit target next week is 99.16. If it gets there, I'll take 10% of my position off. That's first profit target, 99.16. Well, I always put 99.16 plus another 426. Don't know what that is in my head. Well, we can do it since I have my calculator here. Second profit target, 103.42. If it gets there, I'll take another 10%. Add the second profit target of 103.42 plus 4.26. That will be my third. At 107 would be my third. I place them in there, place them in the system as limit orders. If they get there, great. I don't even have to be around the computer. They just come on out. So that's how I do my partial profits. Of course, if we get to my 1.5 ATR trailing stop level up here, then I go into trailing stop mode, which I always love. This particular trade, just entered it on Friday, but we had that kind of melt up at the end. And this particular trade, starting off not too bad, up 0.35%. So just real quick, been a really good week. Qs up 2.93% on the daily. Gold up 2.08% on the daily. XLV up 1.37% on the daily. Apple had the loss of 1.74% on the daily. QLD up 6.22% on the weekly. SSO up 6.83% on the weekly. IWM up 12.78% on the weekly. CarMax up 7.19% on the weekly. WBA down 2.24% on the weekly. AMD up 5.42% on the weekly. UNG up a whopping 13.66% on the weekly. Pfizer up 0.29%, and Amazon up 0.35%. So very, very grateful for those trades and all the positions that I've had. They've been doing very well. But as you can see, I get out of my trades very quickly if I'm wrong and stay in these when I'm right. Okay, let's do a little trader psychology, shall we? This is from my really good friend and mentor and teacher, Steve Burns. Great trader, great author, great teacher. A lot of what I teach you is what I have learned from Steve over the years. And I read through these. I was like, this is really good. This is trading psychology and also some good trading words of wisdom. And please follow Steve on Twitter at @SJosephBurns on Twitter. Always posts great things, and it's worth your while to give him a follow. 5 must-read quotes from Steve Byrne. It costs you zero to wait for a good trading signal. This is what I was telling you about before. I teach this to all of my students, and I try to teach you on this podcast, but identify the level that works on the time frame that you're looking to enter. If you're trading the dailies, look for that level on the daily. Mark that level. Go, okay, this here would be a 200 or 300 or 250. Then make sure that level also has some kind of support on the higher time frame. If you're trading the dailies, look for a level on the weekly that also dovetails with the price that you want to trade on the daily. Sit on your hands, wait for it to come there. If it doesn't come there, just don't take the trade. But if it does come there, take the trade. All the trades that I showed you in the last few minutes, I did that exact same thing. And waiting for the trade was the key. So the best advice, the best trading words of wisdom I can give you, identify a level that works on your trading time frame and on the larger time frame. Sit and wait for it to get there. Doesn't mean you're going to be right, but you're increasing your odds by waiting for that level that works on 2 time frames. So the key is waiting. It costs you $0 to wait for a good trading signal. Very important. I believe that profitable trading is simply putting on good risk to reward trades after the right signal with the right position size. Well, 100% true. And that's what I'm talking about. It dovetails back to the first one. It costs $0 to wait for the good trading signal. Then when it gets to your level, make sure it's a good level, 200, 30 RSI, 250, 300, or whatever trading you're waiting for. But then when it gets there, it doesn't mean it's going to be a profitable trade, but it gives you a good construct of how to construct your trade from. Hey, if it's over this 200, I stay in. Boom. If it's under, boom, I'm out quick for a good loss. And he also says with the right position size, hugely important. That's why I was just telling you about how to position size using the 2 ATR. So I believe that a profitable trading is simply putting on good risk to reward trades after the right signals with the right position size. Totally true, Steve. And this is what I've been talking about. And this is exactly what I do. This is exactly what I teach in my one-on-one classes. The fastest way to lose your whole trading account is to try to quickly double it. Well, that's true. Trading gods do not like when you want to quickly double your account. It's a great way to lose all your money. I am telling you, be patient. Wait for the signals, position size correctly, get out quickly if you're wrong. You can double your account, certainly, but it's not going to be quickly. And if you try to do it quickly, like I said, the trading gods do not allow this. They will teach you that they are not happy with this, so don't do it. If you've had a bad trading run, just reset, start over, take the long term on the trading. You know, it's a marathon, it's not a sprint. The greatest edges rich traders have over unprofitable traders are discipline, patience, perseverance, and quantified winning system. It's true. It comes back to waiting for your good signals, right? You have to be disciplined. You have to get out when you're supposed to. You have to position size quickly. Here's the patience, the perseverance, and a quantified winning system. What is that? Well, that's identifying levels, getting that buyer should be coming in, position sizing correctly, getting out quickly if you are wrong. Once a trader has the right plan, most of a trader's problems arise from not being able to sit patiently and waiting for the right opportunity. I discussed this earlier. Everyone, listen, we all seem to concentrate on stop losses. It's true. It's very, very important. And that's a skill of having the patience to get out when you are wrong. But the other skill is what Steve is saying here. You have to sit patiently in that trade and not do anything. It's really hard. It's really hard. It feels good to take profits, but sometimes in trading we have to do what's uncomfortable. It's uncomfortable to get out and take a loss. Yeah, it is, but you have to do it. But it's also uncomfortable to sit through a trade that's going your way because you're thinking, oh, this has got to be the top. Oh, I think I'll just take it off. Well, For me, I take partial profits. That's part of my plan, but it is very important that you can sit on your hands and let a big trade develop for you because, like I mentioned, you need occasional big trades to pay for all the little trades that you are going to have. So thank you so much, Steve. Really good trading words of wisdom here. Please follow Steve over at S. Joseph Burns on Twitter. It is definitely worth your while. All right, let's touch on Frank's poem here, and then after that, we will get to the potential setups that I'm looking for next week, both on the daily and the weekly. You can follow Frank at FrancoD over on Twitter. He's a great journalist, great musician, great trader, and has an unearthly ability to write poems every day, and I love to at least cover one of them in each podcast. Today's market poem: respect your decisions on the trades you make. Confidence is important for your own sake. Markets are in real time. There's no second take. A trader's plan and preparations should be baked in the cake. Of course, do you see the reoccurring pattern here? Everything I've been talking about today is plan and preparation. Plan your trade, prepare your trade, know what to do. If it goes up, know what to do. If it goes down, you have to know what to do. Every trade is an if then statement. If it does that, then I'm going to do this. If it does that, then I'm going to do this, right? And again, this is what I teach in my course. This is what I teach. I teach you exactly how to set up a trade so that regardless of what happens, you know what to do. One more time, respect your decisions on the trades you make. Confidence is important for your own sake. Markets are in real time. There's no second take. A trader's plan and preparation should be baked in the cake. Thank you so much, Frank. Appreciate that. As always, please follow Frank over at Franco D. Okay, quickly, before we get to potential new trades for next week, I did an interview with Michael Lamothe, and it's got a lot of good feedback on here. You can go to my channel, Gossett Trading and Mentoring on YouTube, and take a look. He's a great author. He's a best-selling author. He has a new book out, and I think you'll enjoy it. And we go over the 8 trading principles that any trader needs to have to be a successful trader. And I interviewed him fully on there. There's him. There's me without the hair, right? But go ahead, take a look. And just look it up, Gossett Trading and Mentoring interview, best-selling author and trader, Michael Lamothe, over on Twitter. And I think you'll enjoy that. Okay, let's get to next week, shall we? Let's start with the dailies. Okay, as I mentioned at the beginning of the podcast, it's very important on the weekend or when the market's closed to identify a level that works on 2 time frames. Don't do anything until it gets there, if it gets there. If it doesn't get there, fine. Don't do anything. We'll get on to a different market. Well, okay, here is BITO. I don't talk a lot about Bitcoin. I really don't, but this is starting to make sense here because BITO, it's 1369 down. It was down huge on Friday, down 5.46%. Well, let's identify a level. Well, here's the 200-day moving average. This is a level. It's a legitimate level. 1310. Now, I drew a line here at the 200-day moving average because I want to go over to the weekly. I want to see where this 200-day moving average dovetails on the weekly. Okay? So the weekly here's about 1310 is the 200-day moving average. Yep, right there, 1310. There's the 200. Now, we had a golden cross here. This is when the 50 SMA closes over the 200 SMA. This is a long-term bullish position, but usually, and I've been mentioning this for a couple weeks, as soon as the bullish cross happens, you usually get kind of a pullback. Don't know why. It's a change of trend from a moving average perspective, and then usually get a pullback. And I have noticed it's a very, very good time to buy. So I've identified the 200-day moving average on the weekly. On the daily. Now, I drew the line. Let's go to the weekly and see if that particular line lines up with anything nicely on the weekly. It does. 20 EMA on the weekly. There's all sorts of different levels you can use on the higher time frame. one ATR channel, two ATR channel, three ATR channel, -1, -2, -3, 5 EMA, 10 EMA, 20 EMA, 30 RSI, all sorts of stuff. But in this particular case, again, the 200-day moving average on the daily dovetails with a nice level on the weekly. See how that works? So I'm just going to sit, wait. If BITO goes down, has a close under the 200, over the 200, that's my entry point. Or intraday rejection on the 200, that's my entry point. Or a bounce at the 200, that's my entry point. It dovetails, that level dovetails nicely with the weekly, and that's what's going to help your trading. Not always is it going to be a profitable trade, but it really improves my chances, at least in my experience. And again, this is what I teach in my private one-on-one lessons. So that is what I'm looking for next week, if and only if I get some kind of rejection, bounce, or close under, close over the 200. Walt Disney. All right. All right. Walt Disney rallied a little bit with the rest of the market. Here we go. Here's the 200. Now, a close over the 200 would give you a decent risk to reward ratio. At least if it closes up here, no, not getting involved. But if it has a nice gentle close above the 200-day moving average, that would give me the support of the 200-day moving average underneath me and help me set up my trade. Here's the line. The 200, let's see where that line dovetails on the weekly, see if there's anything else there. Well, you can see on the weekly, we have the 20 EMA and 10 EMA. Remember now, it has to get above the 200. So if it gets above the 200, it will have also rejected the 20 EMA on the weekly. That's a supporting level on a time frame. So for Walt Disney next week, if it closes above the 200, that may be a potential long trade for me on Disney. Microsoft. Okay, well, technically, this is a legitimate signal. This was a legitimate buy signal on Friday because we closed under the 200, then we closed over the 200. But it's a little chasey. And what do I mean by chasey? Well, if I bought here on Friday, then my end of day stop is going to be a close below the 200. It's kind of far away from that, right? So it gives me more risk. So I didn't take a trade on Microsoft because of this reason. Risk to reward is extremely important, but this came from a lower low, meaning this was lower low than this pivot here. It closed back above. When you have lower low closes back above the 200, very often you tend to pull back and test. So I did not buy Microsoft on Friday. It may just continue up, and if it does, great. For those of you who have Microsoft, I hope it does. But in the case that it does come back and retest the 200, then I would enter into Microsoft. I drew the line at the 200. Let's see where that dovetails over on the weekly. Not bad. We rejected the 20 EMA, the 10 EMA, and the 5 EMA. But if it comes back to the 200 on the daily time frame, then it gives me a better risk to reward ratio. And it also would still have the support of the 10 EMA underneath it on the weekly. So that's what I'm looking for next week. Some kind of pullback, retest of the 200 that gives me a better risk to reward ratio. Netflix. Well, Netflix has been quite weak. Bounced a little on Friday, but not much. So, again, let's go through the process. Here's the 300-day moving average. This is the orange line here. I drew my level, $300, by the way, strong psychological level. Next week, if we get down, bounce, close under, close over, or intraday rejection at the 300-day moving average, that will be my entry point. Now, I drew the line. Let's see where that line dovetails on the weekly. Well, nothing, not exactly perfect, but it is right in the middle of the value zone, which is something in my opinion. I'd like it better if the 200 or the 300 would have dovetailed at like the -1 ATR channel. But still in the value zone, not perfect, but I don't hate it. There's something there just in the value zone. Being there in the value zone is enough for me. So next week, if Netflix, obviously it's gone from 179 down to 315. So definitely it's going on sale a little bit, but it would make sense to me. So if Netflix does get a balance rejection or close under, close over the 300, that would be my entry point for next week. And then last but not least, Verizon. So Verizon really had a sell-off here. My gosh, look at this pullback here. Well, where do I get interested? I am interested in going and doing a little shopping for Verizon. Well, Verizon, the next important level on the daily is the 30 RSI. I have a little tool here on Trade Navigator that I can tell for next week, at least for Monday, approximately where the 30 RSI level is going to be. It's going to be down here around 37.53, so about 75 cents below. I drew the line. Let's take a look at the weekly and see if that line dovetails with anything. Again, not perfect, but in the value zone, which is enough for me. We've had a significant move up. MACD is still nicely green, so that level on the day on the weekly is decent to me. We had some support here of these three bars, and that's where the daily 30 RSI level right around 37.53 on the daily dovetails with the weekly. And just makes sense. The stock has come way down. Makes sense. This is something that I will be looking for. So just to recap, BITO for next week. If we get a rejection of the 200, that's my entry point. Walt Disney, if we get a close over the 200-day moving average, a nice gentle close, it can't be chasey or too extended. But if I get a nice gentle close, then it gives me a good it gives me a good risk to reward ratio. So Disney close back over the 200, Microsoft pull back to the 200, Netflix rejection of the 300-day moving average, and Verizon rejection of the 30 RSI. Now, what do I have? I have 5 symbols here. Well, let's just say Monday, all 5 signals triggered. Do I buy all 5? No, I don't. I'm going to look at all 5 of them and try to narrow it down to the best signal. That's something I kind of pride myself on, that even if I had 10 perfect signals, I would look at the daily, I would look at weekly, I would look at the risk to reward ratio, I would look at the confirming signals like V1, V2's rejection of, the 50 RSI. There's a way to involve that. And again, this is what I teach in my course, but I have found over 28 years that even if you have a handful of really good signals, try to narrow it down to the one that has the best confluences of signals on multiple time frames, the best risk to reward ratios, the best overall picture. Okay? All right, now let's go to the weeklies and let's see what's cooking over on the weekly bars. Now remember, if I'm trading the weeklies, I want to look to the monthlies for the higher time frame. Okay, here is DDM. DDM is double leveraged Dow. Now, here's the 200-week moving average. Is it going to get there? I don't know. It could. If it doesn't get there, I'm not going to do anything with it, but it makes sense. I mean, look at the last trade that happened with the 200. Look at this. Close under, close over, slightly closed over, giving a great risk to reward ratio. And that trade was a monster. Is it gonna respect it again? I don't know. Is it gonna come down? I don't know. But I just have to identify here during the weekend, where would I be interested in buying DDM? Well, if it gets to the 200. Now the 200 on the weekly, 58.60. Let's see where that dovetails on the monthly. Near the bottom of the -1 ATR channel, support of the 50-month underneath it makes sense. So if and when, and only if and when DDM gets down here, that's my entry. If not, go on to another market. Etsy. All right, well, here is Etsy on the weekly. We are under the 200-week moving average. If next week potential to get into this trade if we have a nice, easy close back above the 200-week moving average. I drew the line there at the 200. And let's see where that dovetails on the monthly. Yeah. The weekly 200, if it gets over that, would also show on the monthly that we got over the 50. So now I have support of the 50-month moving average underneath me. I also have support of the 200-week underneath me. See how that works? So next week, close back over the 200 would be a potential for me to get long Etsy. Johnson & Johnson. Oof, look at this, everybody. Look at this just brutal move down. Well, eventually I imagine there's going to be a bottom, but from a technical perspective, where potentially could that bottom be? Well, the 200-week moving average on Johnson & Johnson makes sense, right? I don't know if it's going to get there, but if it does, that's where I'm going to take action. About 149.40 is the 200-week. Let's look to the higher time frame, see if there's some confluences there. Really good confluence on this one. 50 EMA here as support. So if the market goes down, tests the 200-week and bounces, that's my entry point. It also shows that over on the monthly that we got very close and the 50 EMA held there. I really like this trade. I really do. I kind of hope it goes down there. If any of you have Johnson & Johnson, I apologize. But I wanted to go down, test, and then go straight back up so we all can win, right? We did reject the negative 30 TR channel on Friday, which is somewhat significant, but it's not enough for me to get into a trade. And by the way, if we do get to the 200-week moving average, it will very likely be some kind of confluence with a 30 RSI, which would be great. And then dovetail that with a close with some kind of rejection of the 50 EMA on the monthly makes a lot of sense. This is one of my favorite trades for next week, if and only if it gets there. And then last but not least, Tesla. I've been talking about this for a while. We had a close back over the 200. Did not take that trade, but I had a nice, beautiful trade on Tesla, but it was on the daily. I'm looking for a pullback to the 200-week. It may just continue up, and if it does, I'm sure a lot of you have Tesla. I hope it does. But if we do get a pullback and retest of that 200, it would be a higher low rejection of the 200. Higher lows are always better, whether you're talking about V1s, V2s, or even under 30 over 30s or under 250s, 200, 300s. Higher lows are always the more profitable technical setup. This came from a lower low, clearly, close back above, but a pullback rejection of the 200 would be great. The 200 on the weekly, let's see where that dovetails on the monthly. Yeah, at the 50. Perfect. This actually may be something that I would sell puts on down to this level because I love the confluence of the weekly at the 200, and that has a confluence of the 50-week below us. Sometimes I sell puts. I do a lot with options as well. I don't mention much about that on the podcast, but that's another way for me to play it as well. So let's just one more time. On the weeklies, if we get a pullback to the 200 on the week, that's my entry point on DDM. Etsy, close back over the 200. That's my entry point on the Etsy week. Johnson & Johnson, if and only if it rejects the 200 on the weekly, that's my entry point. And then Tesla, if we pull back and retest the 200. Last week I was talking about some, let me put it this way. When you're looking at taking signals in the market, I like to look at other markets such as the dollar, bonds, VIX, and see what they are telling me. And last week, we were down, but I said, if you remember, I was bullish and I said, the dollar is looking a bit toppy. We're getting close to the 200-day moving average. It was very, very strong, but I said, the dollar's looking a bit toppy. I believe that it would come down. It's inversely correlated to the market, or in other words, in this market, not always, but in this particular time, the more the dollar comes down, the more the market goes up. That's just the dynamics. And I said, I'm getting kind of bullish on the market because the dollar looks a little toppy. And it's just one way to look at other markets to give you an idea of potentially the direction of the stock market itself. So, yes, this looks a little toppy here. I think we have a few more days of rally, but then if the dollar comes back down, finds some support, then it may bounce back up and then the market would come back down. So, but all in all, UUP looks a little toppy here, and that gave me my bias for the market to the bullish side. Bonds. This is extremely significant here, everyone. I have shown you before island reversal bars or abandoned babies. Well, this is an abandoned baby that happened here on Thursday. Now, what's an abandoned baby? Well, okay, these are bonds, TLT, right? The more the TLT goes up, the lower interest rates go down. The more it goes down, the more interest rates go up. So, the market is going to respond to lower interest rates in a much better fashion than higher interest rates. Well, an abandoned baby is when you have a bar that has a full gap to the left and full gap to the right. See how it's kind of hanging down here in space? There's a gap to the left, gap to the right. This is very bullish for bonds, or in other words, for interest rates to come down. That's bullish for the market. I think we can go back in time here. Here's an abandoned baby to the upside, two of them. See, we have a gap to the left, gap to the right. That's very bearish for bonds. And was it correct? Oh my gosh, it totally was. So keep that in mind that we had an abandoned baby on bonds. This is very bullish and bullish for the market as well. And then VIX is something else I like to look at. And, here was this trend. I had a great trade on VIX, if some of you remember, moved up nice. My trailing stop levels got me out before the big move down. Look at this trend line here at the bottom. See how he broke down? And I was thinking to myself, if we break here, the market's going to go up. That's exactly what happened. So it's a good thing to take a look at. So, I've mentioned several times about my one-on-one lessons. Like I said, I have taught people from all over the world. I love to teach. It's very important to me that my students succeed. It's important. That's why I started the channel. I love to help people with their trading. And if you want to learn trading the correct way, all 5 of the different approaches that I use, I offer a one-on-one course in the evening time via Skype. The course is a total of 15 hours, so you're going to be hanging out with me for 15 hours, 5 sessions. Each session is 3 hours. I teach you step by step everything, how to position size, all the different trading approaches that I use, trailing stops, end-of-day stops, profit targets. It's a great course. It's worth every penny. You're going to be glad that you took the course. And how do you do it? Well, all you have to do is send me an email. The email is in the link of this YouTube video. Just send an email and say, hey, Greg, potentially interested in taking your course. I will reply and say, hey, great. Thanks for saying hello. Let's do a Skype call. An initial Skype call. It's totally free. It is not a sales call. I promise you. I just want to learn more about you, your trading, your challenges, your goals, and it's a great time for you to ask me any questions about the course, the format of the course, and how it's done. And then when we're done with the call, we'll say goodbye, and then I'll never contact you. It's up to you if you decide one day, hey, you know what? That sounded like a good thing. I want to learn trading the correct way. And you could just write me back and say, you know what? Let's do it. And we'll set up a time and a date, and we will start the lessons. And the lessons are great. I record every single lesson, so you always have that in your library. You can always reply back to it. But I hope you do it. I know you're going to be happy that you did. I promise you. If you like online courses, I have a great online course called the Deep Dip Buy Stock Trading Strategy. It's over at udemy.com. The link is in the description. It's super affordable, everyone. It's like $12 to $15 depending on the day on Udemy. And in that course, I teach you step by step how to trade the deep dip buy stock trading strategy. And so many of the trades that I showed you this week, so many of them we're deep dip by stock trading strategies, and it's a great skill to learn. It's not as good as one-on-one, but what you get for $12 or $15, you get 9.5 hours of video, you get 26 videos total, you get 15 study guides. I mean, for the price and what you get, it's unmatched. So do yourself a favor. If you have the 12 or 15 bucks kicking around, click the link in my description of this YouTube video, watch the course, and I know you're really going to enjoy it. If you like today's podcast, I would certainly appreciate if you could hit the thumbs up button. It does help to build the channel. It lets YouTube know there's some valuable content here. I do my best to bring valuable content here and to teach you how I trade and how I view the market. And really all I ask for is, just hit that thumbs up button for me before you get on with your weekend. If you could share it on social media, that would be wonderful as well. I would definitely appreciate that. And lastly, most importantly, everyone, please go out and try to do something nice for someone today. If we all did one nice thing every day for another human being, the world really would be a better place. Think about it, right? Can you imagine billions and billions of people doing one nice thing a day? And I think we could use it in this time, in this time and space, right? We could use some people being kind to each other. It would make the world a better place. So if, I try to do it once a day, it doesn't have to be something big. Hey, hold the door open for someone, give someone directions, just lend an ear, anything. But on top of that, if you could also try to go out and do one nice thing for an animal, that would be the best too. One nice thing for an animal, one nice thing for a human, it would just make the world a better place. I was raised with many animals. I'm very close with animals, and I can assure you that they appreciate acts of kindness as well. So I hope you enjoyed the podcast today. If you have any questions or comments, please leave them in the comment section. I'll do my best to get to them. I hope you have a great weekend. Go into trading next week and decide, hey, I'm going to follow my rules. I'm going to look for good risk to reward ratios. I'm going to look for good entry points with good support. I'm going to position size correctly. I'm going to place my emergency stop. I know exactly where my end of day stop is. The higher time frame is going to dovetail in with the shorter time frame trade that I'm taking. That's the key, everyone. Patience, preparation, planning, and then sticking to your plan. So thank you so much for your time. Appreciate you watching if you've made it all the way through, and God willing, I will see you next week. And on the way out here, I have to run the U.S. legal disclaimer. Thanks again, everyone. Have a good one, and hopefully talk with you soon. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.